Today, I'm going to show you how you can start your own liquidity mining business and earn passive income on your crypto. Now, it's important that we understand number one, what DeFi is, number two, what crypto is, obviously, and number three, liquidity mining. So we'll start with cryptocurrency. So cryptocurrencies are just digital currencies, and a lot of us already know what they are. They're alternate currencies to the US dollar, and the ultimate goal behind a lot of these cryptocurrencies is to make money. And a lot of these coins are also made to bring use cases to their users. But sometimes there's coins like Dogecoin or Sheeb that don't have much use case at all. And those are the ones that we avoid, because remember, since we're starting our own liquidity mining business, we want to be safe and calculated in the assets that we are liquidity mining for. So this means we want to look for assets that are going to have a solid use case. Additionally, let's talk a little bit about DeFi. Decentralized finance is an alternate finance system that runs on blockchain technology, and it utilizes cryptocurrency. Instead of Amazon Web Services hosting a ton of different servers for, let's just say, the company Microsoft, what's happening is Microsoft servers would basically be hosted by a ton of different people all around the world. So that would make their network decentralized. And obviously, Microsoft is not decentralized whatsoever, but a lot of the companies in the DeFi space obviously are decentralized. Or they may just run on a decentralized blockchain. One of the largest decentralized blockchains is the Ethereum network, and it has about $60 billion in TVL. There's people all around the world hosting the Ethereum network and validating transactions on it, which means that if a couple validators go down, or even every validator in the whole United States goes down, then guess what? The Ethereum network is not affected whatsoever. That's because it's a completely decentralized network and nobody is in control. So essentially, decentralized finance is ran on decentralized networks, and it also just adds to the fact that no one is in control. You don't have these intermediaries where they process your transactions for you and take 3 to 5 days. Everything goes through instantly, which is great. So now liquidity mining is the next aspect. Liquidity mining is a bit trickier of a concept to understand, but it's the basis of providing liquidity for assets that we are bullish on. So I'm going to try to break this down to you. So here's a pool, USDC to ETH. Now you will be providing liquidity into this pool, and you'd be being paid by the fees that the traders are paying. So if someone wants to swap USDC to WETH, they pay fees in USDC. So say they want to sell $10,000. Boom. So they'd be paying fees. So you look here, the order gets routed through here, through this 0.05% pool, and then this is the fee that they're paying. So on $10,000, they're paying a very, very little fee, about $5 or so, but that fee is going right to the liquidity providers in the pool. And when there's billions of dollars of overall volume collectively in the DeFi market, these fees can add up really, really well for liquidity providers. And it's possible to earn APRs up to upwards of 70 to 100% per year. So basically, we're facilitating these trades, allowing for these trades to be executed, and in return we're getting paid. We're getting paid the fees basically. This is the classic concept of market making, like a lot of stockbrokers have, or even centralized exchanges in crypto have, except the fees are much, much lower for the trader, and they go directly to the people that are providing liquidity, as opposed to the fees going to some large institution and the little guys like me and you being left out. And when I say little guy, you can have $1 million and still be a little guy compared to a guy who has $1 billion. So as far as liquidity mining goes, the first thing you're gonna have to do is go ahead and set up your wallet. Here at Builder Wealth, we prefer a Ledger Nano X wallet paired with a Rabby, and that's essentially going to allow you to access all these different decentralized applications. Remember, everything's decentralized. It's not based on accounts. You just simply head over to Connect and you hit whatever wallet you're using, and then boom, you're connected to Uniswap, or you're connected to Orca, or whatever exchange you're using. And then from there, you're able to execute trades and trade one asset for another asset. And at the same time, you're able to provide liquidity, as easy as that. So we're not going to go too in depth into that. I want to talk more about liquidity mining as a business. I'm not talking about going out and getting a LLC registered or going ahead and getting a legal entity. Really, it's pretty simple. I'm talking about you are providing a service, and that service is basically running a business. It's important that we treat it as a business, because if we treat it as a business, we can get better returns than if we just treat it as like a hobby or some side thing. So by having that analytical approach, the strategic approach, it's going to allow us to get the best returns possible. So obviously in a business, the first thing you do is outline your plans and your goals. So here's my initial plan. My initial plan is going to be provide liquidity for assets that I think will do well, and hopefully these assets will outperform if I just hodl in the market, because some risk that we do have as a liquidity provider is impermanent loss. Impermanent loss basically just represents the difference as if we were just to hold on to our assets or put them into a liquidity pool. So for example, if you're investing into a pool and the asset you have goes down in price, and the fees that you have been getting from the asset aren't making up for the money that the original investment went down, then you're pretty much out of luck stuck and your investment is negative. But say you're investing into a coin or a pool rather, and the asset goes down a bit. Maybe it goes down by like 4%. Maybe you have earned some fees, a good amount of fees if you've been in the pool for a while, and it can make up for a good amount of that 4%. So you won't be down a whole 4%. Maybe you'll only be down 1% or 2%. So as you can see, the fees can change how much you really lose or gain depending on if the asset goes up or down in the pool that you're in. I also want to have a goal of earning passive income of at least 70% APR per year. It's crazy to think that this is actually possible in DeFi, which means that if I'm deploying $100,000 in capital, I want to earn at least $70,000 in capital back for that year. And this would be in terms of fees alone. And of course, I want my assets to appreciate over the course of the bull market to add on to those returns. So I'm going to look for assets that have high growth potential, but also high yields on them. So first things first, what assets am I going to include in my portfolio? Now, I want to take a safe approach in terms of this video. So I'm going to write Bitcoin, Ethereum, Solana, AVAX. You can consider these as blue chip tokens if you'd like. Then we can get into some altcoins like Link, there's Matic as well, and there's Render. Really, you can put any coins that you truly believe in. And you can find these assets on CoinGecko or CoinMarketCap. I recommend going to these sites, clicking on assets, and really analyzing and doing your own due diligence on them. Also, try to figure out the use case for them. So we can go ahead and pull up Aptos right here. If you scroll down, it will tell you exactly what recently happened to Aptos. And you can also find some information about Aptos. There's also a news section if you want to learn more about what's happening in the ecosystem. But overall, just look for some tokens that you want to include in your portfolio. So maybe I want to include Aptos. So I'm going to pretend that I did my due diligence on it and I'm interested in that coin and I think it's bullish. So I'm going to type in Aptos on my list, or rather APT is the coin name. So boom, I have a solid list of assets right here. Next thing I want to do is start to figure out what I can pair together. So when it comes to pairing assets together, we're going to analyze the top decentralized exchanges across a couple different networks. So if we're doing anything with Ethereum network, Polygon network, or Arbitrum network, or even Optimism network, we're going to analyze on the uniswap.org website. So for example, if it's on the Ethereum network, I'm going to go to uniswap.org and make sure it's on the Ethereum network. And then I'm going to start to find the asset to make sure a liquidity pool is there. So first things first, I'm going to go Bitcoin ETH, Bitcoin Sol, Bitcoin AVAX, Bitcoin Link. So et cetera, basically. I'm pretty much just pairing Bitcoin with all these assets. But then after I list these out, I need to determine which ones I can actually do. So for Bitcoin AVAX, we want to go ahead and go over to TraderJoeXYZ.com. Bitcoin ETH, we want to go ahead and head over to Uniswap. And then Bitcoin Solana, we're going to want to head over to Orca. So what do you do once we're on those sites? Let's go ahead and pull it up. So first thing for BTC, we're going to type in BTC. And quick little note, we're going to be using wrapped Bitcoin. So type WBTC because we can't do anything with native Bitcoin because it's the exclusive asset on the Bitcoin network. So an alternate website you can use that can make things easier is metrics.finance. The site is free to use. This is our own software and we keep launching new features. So go to simulate on the top, Ethereum network, and let's go to wrapped BTC, WBTC. Here we go. And then here we're going to do wrapped Ethereum. So here it's going to pull this up and tell us where liquidity is allocated. So in this scenario, if we have 0.3%, I'm going to hit simulate. You can see that we have 300 million TVL in this pool. That's not too bad. I think I could definitely do a Bitcoin Ethereum. And obviously we do that with every other Uniswap pair on here. Now when it comes to Bitcoin AVAX, once again, go to Trader Joe XYZ. I'm going to go over to pool, scroll down, and then I'm going to type in WBTC. Perfect. You're going to notice with WBTC, there's only WBTC paired with BTC.B. And as you can see, when it shows BTC paired with AVAX on here, over here, it only shows like $1,000 in liquidity, a bit more. So as you can see here, the BTC with BTCB is over $1 million liquidity here. So we're going to count this one because obviously here, I'm not going to count that because I don't think I'd make any money if I were to deploy into this. So instead, I'm just going to type Bitcoin and this is going to show me all the stuff that includes Bitcoin. So here you can see Bitcoin B AVAX, and this basically stands for Bitcoin Bridged. It's on the Avalanche network. It's like wrapped Bitcoin. So we could do Bitcoin AVAX as well if you'd like. Then when we're over on Orca, we're going to head over to liquidity right here. So over here, we're going to type in Bitcoin BTC. And as you can see, there's a lot of different options for Bitcoin. I'm going to make it easy for you and go with the wrapped Bitcoin wormhole. And you'll notice there's WBTC Sol right here at the top. So we're going to go ahead and throw that on our list as well. So that's essentially what we're going to do for all the assets on our list. So I'm going to pull all these through and crunch the pairs together and then come back. I just found that we can't do Bitcoin Link. So I'm going to go ahead and remove that from the asset. It was possible to find that by going to Metrics Finance and seeing if there's a Bitcoin Link pool, and there actually wasn't one. Also, for this pool, Ethereum to Sol, you'll notice that it's on Orca as well on Uniswap. So there's two different options for Ethereum to Sol. So if you go through, find these assets and crunch them together, you can find all these pairs. So now I have a big list of assets that I can go through and find ranges for these pools. and then eventually deploy into it if it's looking good. Now, personally, I wouldn't deploy into all of these for the sole reason of it being a very pain to manage, especially if you're a beginner. It could be smarter to deploy into only like 3 to 5 of these positions so it can be somewhat passive. So next thing I do is go ahead and find the ranges for these pools, and I do already have content on this channel of how to do that, but I will go ahead and give you a briefing over on Metrics Finance. So I'm going to go to Uniswap, Ethereum, and go to WBTC. Here we go. I'm going to do it to WETH again. I'm going to go ahead and hit this one here, 0.30%, and then hit simulate. So I personally think that Ethereum is going to outperform Bitcoin, so I'm going to do something that I recommend you look into. So that would be weighting more of my assets towards Ethereum. So I can't just say I want to deploy more Ethereum than Bitcoin into this pool. I have to adjust my range accordingly. So first things first, I'm going to capture the last 30 days of data. So I set this to 30 days. It's already set. So we can see the last 30 days over here. So I'm going to go ahead and adjust my min price until I have about 65 or 60% of Ethereum. So let's go here. So now I'm going to bring my max price, this green line, closer to the graph here. And then I'm going to go ahead and change my min price so I can have about 60 to 65% in Ethereum. So let's get that around here, 64%. Cool. Now it brings the yearly APR to 26.8%. So my range is 17.4 to 19.5. I'm going to jot that down right here, 17.4 to 19.5. So that's my range for this concentrated liquidity pool. And that is earning a 20% APR as long as everything goes according to plan and the assets don't dip a ton. So essentially what I want to do is analyze wrapped Bitcoin to Ethereum on all the different fee tiers, as well as analyzing on all the different networks it's on. So since it's a highly adopted pair, it's also on Arbitrum and also on Polygon. I believe it's also on Optimism. I'm going to want to analyze it on all these networks to see what could give me the best possible return. So for simplicity purposes, we're going to assume that I went through all these and found ranges. Keep in mind, this is going to take time. This is not easy, but same thing as starting a business. Once we have info and data on all these, for example, we're going to select the ones that we want to deploy into. So I'm going to highlight these two right here because these, to my eye, I was most interested in getting into. So I have the ranges, I have the APRs. Now it's time to figure out how much money I'm deploying into each position. So now I listed the pools and the projected APR, and now we're going to figure out how much capital we want to allocate to it. So now the wrapped Bitcoin ETH has a lower APR, and I'm going to imply that it is a lower risk pool. So I'm going to allocate more money towards it. So we're going to assume that I have $100,000 in capital to deploy. Keep in mind, you can deploy any amount of capital you'd like in DeFi. There's no limits. I would just only recommend going into liquidity pools or concentrated liquidity pools if you have over $10,000, and that's more to make these returns actually worth it for the amount of time that you have to put in. And the time is typically going to be 3 to 4 hours per week after you've officially established your portfolio. So personally, I'm going to say $70,000 to wrapped Bitcoin ETH and then $30,000 to ETH and Link. Now, typically it would be more than 2 pools here. I just, for simplicity purposes for the video, did not find all the ranges and APRs, and I wasn't really too interested in getting into this one. So this is what we have so far. So we can go ahead and multiply the yield by the allocation, and it's going to basically give us the supposed APR. So now we can calculate the estimated amounts of money that we'd actually be making per day, assuming everything goes according to plan. So I'm going to type in yearly return and then daily return. So I'm going to divide this E3 divided by 365. So 14,000 divided by 365. So here we go, 39 and 38. And now when I add it all together, it's giving me the total estimated daily return. So essentially it's estimated to be almost $30,000 per year and $78 per day. And then when we do the math, the projected APR would be 68%. So if you're comfortable getting into these positions, the next step would be to open these positions up over on Uniswap or Orca. Then of course, when we open them up, we need to take a business approach when it comes to tracking our positions. So it would be best to make a Google Sheet or something with a ton of different key performance indicators, such as the days deposited, your total APR, your profit, your loss, the current capital you have invested, your strategy, etc. And overall, the document should give you an insight on how your overall portfolio or business is doing. So remember, tracking is very, very important. Remember, in no way I'm a financial advisor. Do your own due diligence and research. I am just here to try to break things down and make it easier for you. And yeah, so that is the basis of this strategy. And this is basically running a business because number one, we're providing a service. And number two, we need to take a business approach to be serious about it. And we need to make sure that we're tracking things properly and that this isn't just some like side hustle or some side thing, and try to make it some really good form of income. So this is a very solid approach you can take if you are a beginner or starting all over. And for those of you who have $30,000 or above ready to invest into crypto or already invested into crypto, we do have a 5-phase program where we help you build out a passive income portfolio. This is all through decentralized finance, and we literally do the complete portfolio build out for you. And we hop in calls to make sure you have support, and this consistently works. And we could have your portfolio deployed in as little as 2 weeks and have it optimized optimized, managed, and running in as little as a month. So if you want to learn more about what we do, I'm going to leave the link in the description down below. We've worked with over 100 clients in the past and have amazing results, and our clients are collectively making over $300,000 per month. If you found the video informative, subscribe with notifications on and drop a like, and I'll see you in the next